All right, what's going on, everyone? In this video, I'm going to be showing you guys when to use the golden pocket and some other key fib retracement levels that I like to use and when not to use, because there are certain circumstances where you might not want to use the golden pocket for your entry criteria. And this all comes down to market structure. So this is going to be another educational type video where I'm going to use the path tool on TradingView and show you guys exactly what to look for when you're entering on the golden pocket, and then another strategy I like to use in a different type of market condition. So let's get this path tool out. All right, boom. So when to use fib retracements, right? I like to use them in an uptrending or downtrending market. All right, so an uptrending market will have higher highs and higher lows, something like this. And I'll like to enter on the golden pocket on the retrace, right? So right around here, you'll draw the fib from the swing low to the swing high, and then you take a long position at the golden pocket with your stop loss right below, and then you'll target these highs as your take profit. And of course, let your runners run in case you get another impulse move to the upside. That's the main scenario when I like to use the golden pocket via entry. Now, this is the same for a short position, right? If you have lower highs and lower lows, you'll enter drawing the fib from the swing high to the swing low. So in this case, you draw it from this high to this low. Put your stop loss somewhere around here. You can also put your stop loss above or below that swing low, but just keep in mind your risk to reward is going to be a lot lower. All right, now another scenario where I like to use the golden pocket for entry is a change of character. So similar to a break of structure, this is when you're seeing higher highs and higher lows, and then you get a change of character where you're making lower lows come back up, test that golden pocket, and then enter a short position. So you draw the fib from the swing high to the swing low. Again, you'd enter the short position right around here, put your stop loss right around here, and target the lows for your first take profit. Now, when you're using the golden pocket, I like to see some sort of confluence, right? So I'll mark this out right here. I don't want to enter solely off of the golden pocket. I need to see confluence. So the first piece of confluence I like to see is a key support or resistance level, right? So a key support or resistance level where buyers or sellers have stepped in previously, you can look for a reaction at that level again. All right, the indicator that I like to use for these levels is Easy Algo. If you don't have Easy Algo, be sure to click the first link in the description below. These will identify the key support and resistance levels for you automatically. And we also have a multi-time frame feature, which is very, very useful, especially when using this strategy. So that's the first piece of confluence. I need to see a key SR level. So I'll mark it up, key, not just any SR. We need to see a key support or resistance level. So again, this is a level that price has already reacted from. It is a strong support level. It could be a higher time frame support level, like a 4-hour support. And when you have that golden pocket confluence, that is a great spot to enter the trade. Now, that's mainly for when you're entering with the trend, right? If you're in an uptrend and you see a strong impulse up, you'll enter somewhere around here at the golden pocket. As you can see, that would be a breakout and retest of that previous high, and you're trading with the trend. So the key SR would be a great confluence in this case. Now, if I'm not trading with the trend and I'm looking to enter on that change of character, I need to see a different type of confluence. So in that case, I like to see a fair value gap or an order block for the confluence entering after a change of character. So if you don't know what a change of character is, there are many, many videos on YouTube that can teach you exactly what a change of character and a break of structure are. But essentially, it's when market structure is shifting, take out that liquidity, come back up, and then make a lower high. But I don't want to enter solely on the golden pocket. I want to see some sort of fair value gap in this general area. It might not be at the golden pocket. It might be at the 0.5, right? So you might want to enter before the golden pocket. Now, some other key fib levels I like to look at. All right, other key fib levels I like to look at are the 702, which is essentially the golden pocket. All right, the 702 is pretty much the same as the 0.65. So you don't need to toggle that level on. You can kind of just look at it. Essentially, you're looking for a 70% retracement, right? A 70% retracement. And the other level I like to look at is the 0.786, all right? Now, these levels will often see reactions if you're in an uptrending market. The only problem with these two levels, I see a lot of people talking about these two, and they're very good. The only problem with these two levels is that price will not reach these levels most of the time, all right? A lot of the times, especially when you're in an uptrending or downtrending market, price is going to reach the 618 and bounce from the golden pocket. So you're not always going to see a retrace towards the 786, right? So I use the golden pocket. I keep it simple. It works. The 0.618 is not only a Fibonacci level in trading, it's also a number in the universe. All right, so that's when to use fib retracements. But when do you not use fib retracements, right? Because there is a time and a place where if you use fib retracements, it might not be in your best interest, all right? And in this case, it's in a ranging market. So in a ranging market, you don't want to use fib levels, all right? And the reason being is that when you're in a ranging market with a clearly defined range, right, with range highs and range lows, and price is looking like this. This is the current Bitcoin price action, so I think it's a good time to make a video on this. The range high is going to be right here, and the range low is going to be right here. When price finds its way down to the range lows, right? When price finds its way here, oftentimes, right? Oftentimes, if in a ranging market, it will continue the trend and revisit the range highs. So that means if you're going to enter a short position at the golden pocket, you're going to get stopped out because all of the liquidity, right? All of the liquidity is up here at the range highs. There's not many sellers in this area. Even though it's a key fib level, since you're not in a trending market, you're in a ranging market, price is going to find its way to the liquidity. So price always finds liquidity, right? That is how markets are actually moved. It's via liquidity. So in this case, the liquidity is up here at the range highs, so price will not react from the golden pocket. Now, that being said, you can still use the golden pocket in this case, but you have to use it a little bit differently. In a trending market, let's say you're in an uptrend with higher highs and higher lows, you can get away with setting a limit order at the golden pocket with other confluence like a key SR, fair value gap, etc. However, in this case, since we're not in an uptrending or downtrending market, we're in a ranging market, we can still look for shorts at this golden pocket, but we need to see a strong bounce, right? So I need to see some sort of bearish confirmation, usually on a lower time frame. So I'll go down to the 5-minute or 15-minute time frame, and I will look for bearish confirmation, right? Some sort of double top, right? It could be a double top. It could be a bearish divergence, right? So using the easy oscillator, this is part of the easy algo bundle, right? Using the easy oscillator, you can look for some sort of bearish divergence if you're at the golden pocket, or look for the oscillator in the overbought or oversold zones, right? Opposite for a long. If price is at the golden pocket in a ranging market, right? Let's say you're right here, you want to see some sort of bullish divergence on the easy oscillator. So you can still use a golden pocket, but keep in mind, you don't want to set any limits. You want to see a strong reaction and some more confluence before entering the trade. So if we're not using the golden pocket to enter in a ranging market, how do we enter, right? And it's very, very simple. We're using the higher time frame support and resistance levels, right? So the range highs and the range lows, and we're looking for liquidity grabs, right? We want to enter when retail is longing. So when you're approaching the range highs, sentiment is going to get bullish. People will start longing, the bottom is in, we're going back up. And that is when you're going to enter a short. You're going to grab all the liquidity from the previous high right here, where there's sellers that entered a short right here, put their stop loss above that swing high. So you're coming up to stop out all of the short sellers from over here that didn't take profit. And also you're fading retail that are going to long at resistance. So you're grabbing all this liquidity and then you're shorting the market. And you can do the same thing for a long, right? Where you're going to come down, grab this liquidity, and then long it, and price will go back up. So your long thesis in this case would be entering right here. You'd actually enter on the reclaim. So wait for price to break below and then enter on the reclaim. You could also use the easy algo buy and sell signals to help you with that entry on a lower time frame. So you're going to be trading via swing failure patterns in a ranging market. So in an uptrending market with higher highs and higher lows, you're going to look for a retracement to the golden pocket with an SR confluence. If you're not in an uptrending or downtrending market and you're in a ranging market, it's best to use the swing failure strategy where you're entering where other people are getting stopped out and you're trading via the higher time frame support and resistance levels, the range highs and lows, whatever you want to call them. Now here is a perfect example of a ranging market in real time. We have a clearly defined range low and range high. You're going to be entering long positions on swing fails of these candle lows, right? So a long right there. You can short at the range highs. Again, long at the range lows, short at the range highs. And I'm using the 4-hour EZSR levels. Again, we're gonna be long at the range lows, also a swing fail of this candlestick right here. So that is my #1 recommended strategy in a ranging market. But I hope this video helped clear some things up. I try to make this more of an educational video, get straight to the point, no bullshit. And this is how I trade 99% of the time. If you guys enjoyed this video, be sure to leave a like, subscribe to the channel for more trading content, and I'll see you guys next video.